And we're back. I'm Hilary Bailey, and you're watching the Senior Care Conversation on Now Media Television. Loving what you're watching? Don't miss a moment of the Senior Care Conversation or any of your favorite Now Media TV shows, live or on demand, anytime, anywhere. Download the free Now Media TV app on Roku or iOS and enjoy instant access to our full lineup of bilingual programming in both English and Spanish. Prefer to listen on the go? Catch the podcast version of the show right on Now Media TV website at www.nowmedia.tv. From business and breaking news to lifestyle, culture, and everything in between, Now Media TV is streaming 24/7, ready whenever you are. All right, guys, we are back with Joe Reyes, CPA, trusted advisor, and someone who knows how to protect what families have worked a lifetime to build. In this segment, we're tackling one of the biggest fears, losing the family home due to long-term care costs. Joe has helped countless families navigate this sensitive topic with clarity and compassion. So, Joe, welcome back. I have seen this in my work as well. You know, people have to choose between being able to pay for their care and staying in their home. So why is the family home such a big concern in financial and estate planning?
Yeah, that's a loaded one, right? There's a lot that goes into that
Yes.
home, right?
Mm-hmm.
It could be where mom and dad raised their children. There are a lot of memories attached to that home, maybe, maybe the kids, grew up in that home. It's like, I love that house,
Mm-hmm.
and I would love to live there again. So just imagine being elderly, sick, and having very little emotion. Sometimes families forget the elderly parents, and
Mm-hmm.
so just imagine being alone in a home and thinking thoughts that you shouldn't be thinking, let's say, about being
Yeah.
abandoned and being sick and things of that nature. So it's a loaded situation. Plus, on top of the attachment, the emotional attachment. For many people, a home is their biggest asset. Especially if they've been lived in the home for many years. Maybe they paid down the mortgage, they own it free and clear, and it's their biggest asset. So that represents most of their wealth, let's say. Well, who wants to lose that, right? So having a conversation with your family about things of that nature is super important. And if you're not careful, uh, a a dire disease can make that home go away, and that could be emotionally disastrous to the entire family, but especially for the infirmed and the elderly who are suffering every day, in their minds and in their hearts, So um, I would think that uh, families would be very careful about that as they see their parents progress, in age. I have a 21-year-old son, and I talk to him about this stuff all the time, because that's what I do. But I want him to know that, hey, we're looking to leave stuff behind for you. So you should have a vested interest in making sure things go right. So the home is a big deal.
It definitely is, and I love how you brought up the emotional attachment to the home because that to me that's the biggest thing because I come across a lot. I'll be talking to some family members and maybe about one of my clients, and they'll say, yeah, I keep telling mom she just needs to sell her house and come live with us. We've got a room for her. We've got this for her. It's like just like stop and think about what you're asking them to give up. They've lived there probably for 30 to 50 years. You're asking them to give up something where they made their life. So I love how you brought up the emotional attachment because it's not always just about money. It's about what we did there, like we raised our kids there. So thank you for bringing the emotion part into it because I think that's important. So can you explain to us what happens if a senior does need long-term care but they do own a property?
Yeah, so putting aside ethics and morals and what you think about other people, um, you could, if you wind up in a long-term care facility, right? Um, if you're low income, Medicaid, not Medicare, because Medicare only covers it's health insurance, it's not long-term care insurance. So when you need long-term care insurance, if you are low income, you need Medicaid. But Medicaid kind of requires you to be poor and low income. But if you put all your wealth, let's say you're a multimillionaire, let's just use an extreme example. Let's say you're a multimillionaire and you put your house, your wealth into an irrevocable trust and it sits there for 5 years before you ever need long-term care. After the 5 year period, it's called the 5 year look back period with Medicaid.
Mm-hmm.
But after 5 years, and in an irrevocable trust, you're not you don't own that house really. Once you put it into an irrevocable trust, the trust owns the house. But if you get sick and wind up in a nursing home, let's say, within 3 years of doing that, Medicaid rules just say it doesn't matter. We're looking back at that property. You put
Mm-hmm.
it in within 5 years of needing Medicaid, so we're going to take that into consideration for the benefits that you're going to have. But let's say 5 years passes, let's say 10 years passes, and let's say you have millions of dollars in an irrevocable trust. You can appear for Medicaid purposes as low income because they can't look past the trust because you don't own anything. The trust owns everything that you have. So that's, of course, the ethics is, why would a multimillionaire do that? It's designed for people who are really poor, but those are the rules. So putting, your house into an irrevocable trust, if you're an average middle income, let's say, uh, citizen, it's not a bad idea to shield the assets you've worked hard to accumulate over the years to leave to your family. And then the trust handles all that once you pass away. The trust will have all the marching orders, so to speak, as to what to do. So that's one of my best recommendations, because if you are middle income and you get sick and you wind up with $300,000 a year facility, you're toast, really. Even if your house is worth 500,000, 600,000, you're toast,
Mm-hmm.
right? You may get Social Security, maybe you don't have much else left. Uh, you're not going to leave anything to your kids. That house is gone when you die because they can't kick you out while you're living in there. But Medicaid has its eyes on that house so that when you pass, they're taking the house, or they're going to make sure it's sold and take whatever uh, reimbursement they're looking for the benefits that they paid out. So that's a big one right there. You got to make sure it's the right trust. You got to make sure you have the right attorney designing it for you to make sure that your family, you do not lose the house, especially if, let's say, you have young kids,
Mm-hmm.
and you wind up in nursing home. It happens, right?
Mm-hmm.
You can have a stroke at 25 years old,
You can.
and you have a 2 year old, and you have a house, and you have equity in it. It would be very prudent to be looking at that child and thinking to yourself, what if,
Yeah.
and what can I do? And there are things you can do as long as you care enough to go look for the answers. And nowadays, with AI and whatever, you can come up with a whole boatload of data to help you protect yourself.
So this next question, I'm kind of interested to know the answer. What's the danger of transferring ownership without knowing the tax rules?
Big. As a tax professional, I have seen this so many times, and it's just crazy, right? So, mom had a house in Brooklyn, New York, bought it for, $100,000 years ago, put her son on the deed because she wanted to make sure, it was safe in the family. What she didn't know, and what the son didn't know, was if you put somebody onto the deed, you basically give them partial ownership of that house, which is a gift. And if the gift is
Oh.
over 18,000, worth more than
Mm.
$18,000, you may have to report that gift to the IRS. You may not have to pay taxes on it, but you have a reporting requirement. Number one. Number two is what you pay for that house transfers over to your son, to that son. And when the son sold the house, mom died, he sold the house, moved to New Jersey, he sold it for like a $1.3 million. So he had a $1.2 million capital gain because by doing it that way, mom basically said the 100,000 I paid for it, transfer to you. So your cost is 100,000. Now the tax guy said it's worth 1.2. You got a capital gain, $1.2 million or $1.1 million, whatever. Massive, massive tax bill. And the easy solution is just will it. will it to your child. Don't give it to them. Don't put them on the will, on the deed. Will it to them. Say, hey, I died. My son gets at the house. Now the cost basis is whatever it's worth at the time of death.
Okay.
In that case, it would have been worth over $1 million. It would have been over $1 million. He would have had practically nil on a tax bill. So not knowing what you're doing uh, can be very. In his case, he had already spent the $1.3 million he got, and then he got the tax bill, and then he was up the creek, and in those days, if there was some tax rules in effect that are in effect today, I could have wiped out that tax, by the way. But in those days, the tax law was different. We couldn't have done anything about it. But yeah, uh, major consequences by not knowing what you're doing tax-wise.
Yeah. That's that's a little bit scary, but I learned a lot from the questions that I just, finished asking you. Wow, I did not know that about the house. You hear people all the time say, "Well, I'm just gonna put the house in my daughter's name." So I hope that people that are watching this that are having that thought think twice or maybe reach out to you. Speaking of, how can our viewers get in touch with you if they want help protecting their assets or setting up a sound estate plan?
Yeah, my website is reyesaccounting.com. So that's Reyes as in Sam. So reyesaccounting.com. It's got all my contact information in there, and we're doing some social media work. You'll be seeing a lot of us on social media very soon. But it's got my phone number on there. It's got my email. It's got everything you need. Thanks for asking.
Awesome. Well, thank you, Joe, so much. Guys, if you are loving what you are hearing, please come back in just a moment for more with Joe. We'll be right back with more insight, expert advice, and stories that matter to every generation.